There are many names for the same areas: offshore havens, fiscal paradises, or tax havens. In the first list from the year 2000 existed 52 areas and countries which comply with the definition of tax havens. 33 of them were part of the United Nations, within them Russia. According to this, was every sixth of the 193 United Nations member states considered as a fiscal paradise. And from 19 dependent areas belonged 10 to the United Kingdom. Determined was this number by 3 international organizations: the Organization for Economic Cooperation and Development, the Financial Action Task Force on Money Laundering, and the Financial Stability Board. The composition of the list is imprecise and fluctuates. So determined the independent organization Tax Justice Network another number, because the organizations use different criteria to define tax havens. What are the properties of tax havens? Unrestricted capital flow between countries, strict or absolute bank secrecy, forced and unbureaucratic formation of a new enterprise, and tax exemptions for foreign companies and persons. It's not easy to become a tax haven. A tax haven needs great economic and political stability and should not have the reputation to enable money laundering. Tax havens also need support of the big financial centers like New York, London, Frankfurt, Shanghai, and Tokyo, which frequently function as a connection between the regulated financial markets and the deregulated markets. When began tax evasion? This method is new. People tried to avoid fiscal and trade rules for a long time. But this trend accelerates after the Second World War, when many colonies became independent. Because many of the colonies were only transit areas for trade purposes and weren't used for production or cultivation. So were some of the Caribbean islands only used for the Atlantic triangular trade. After the colonies became independent, stopped their former mother countries their financial and political support. Many of the new formed countries could choose then between tourism and financial business. Most of them chose both. Tax havens are attractive because they offer a large field of financial products and banking services, which attracts private persons, companies, and organized crime. What do tax havens offer? Firstly, private persons can choose tax havens as their main residence, then they don't have to pay the legacy tax and only small taxes on capital. This may be morally wrong, but legal by avoiding laws. Equally to the number of millionaires continues the number of tax avoiders to increase. From 4.7 million people with an income higher than $1 million in the year 1996, increased the number to 12 million people in the year 2013. Secondly, use large companies the same benefits. So have the 50 biggest companies in Europe subsidiary companies in fiscal paradises in Europe and the rest of the world. They can decrease their tax by moving profits to their subsidiary companies in low-tax countries. Thirdly, attract tax havens to organized crime, which invest their money from illegal activities in offshore havens. The circle of money laundering looks like this. Money from the Colombian drug trade moves to bank accounts to the Caribbean tax havens. From there, gets it to the legal financial system, for instance, to Europe. And Europe circulates the money between different countries and bank accounts. And finally, it gets back to Colombia, invested by European companies which are controlled by the Colombian drug cartels. As you can see, is the method of money laundering well known, but the real amount of laundered money is hard to ascertain. I hope you enjoyed our trip to tax havens, but there's still a question left. What do you think?